All right, I've shared the new link. So I think just, yeah, waiting for people to join in. We'll just give it 2 more minutes. I see that the Contango team also has retweeted. So yeah, thanks everyone for joining, and sorry that we're running a bit late. Twitter is sometimes still having some random bugs. So yeah, this happened with another one of our Ape into Arbitrum campaign spaces where we, scheduled the space, but then when we tried to open it, the Twitter app just kept crashing. So that's what happened with this one as well. So yeah, thanks for your patience. We'll just wait about like 1 more minute to get started. And yeah, thanks for joining. Really excited and hope everyone had a really great weekend. And if you did get to go to ETH Denver, hope everyone's recovering. Contango team was there. Mitch was not, but from what I could see, seems like everyone from their team had or their representative from their team had a great time, and it all looked super fun. So much FOMO. Really wish that I could have went.
Yeah, indeed, kind of the same here. Indeed, one of our co-founder, Kamel, who was there, just doing some networking, meeting people, and I guess partying as well. Yeah, so he's in recovery mode, as you said, I think, traveling back. And yeah, hi
Actually,
everyone, in the meanwhile.
the matcha booth looked really fun because they had all that like kind of the pyramid of the matcha Pocky. I guess that's like when you're kind of like a food related project, right? It's so easy to come up with something fun for your booth.
Yeah, that's nice. The thing is, for derivative project like ourselves, it's kind of tricky, everything like US related. So uh, yeah, like derivatives are not so welcome in the US, as you may know.
So you
So
have to
we're
go in
just
there
like
kind of
there.
covert.
Yeah, I don't know. I mean, nothing covered, but you can't really be there with a booth, I guess. Uh, it's not like super friendly territory, I would say.
What does
So
Contango mean, by the way?
yeah, cool question. Indeed, it's not like a new name we invented. It's a name that already exists. It's a financial lingo. It's a word that is used to describe when markets are in contango, meaning when the future price is above the spot price. Derivative markets have their own prices for, I don't know, futures, forward. Every time the future or the forward price, for example, is above the spot price, so it's trading at a premium, you say the markets are in contango. And the opposite is backwardation, which doesn't sound as nice as contango, so we chose the first one. Also because markets being contango means the markets are optimistic, that the future is trading at a premium, people are willing to long, and it's a bull market. So yeah, some positivity message there.
Okay, thanks for the clarification there, because we couldn't help but put two and two together. That Contango, it just sounds a bit
Yeah, it sounds
like
like a
a dance move. You know what I mean?
yeah, it sounds like a dance. We also chose it, I think, for that because we have all been living in Spain during some time in our life. So yeah, it definitely has a Spanish flavor to it. So we were like, oh yeah, Contango, why not?
Oh, that's awesome. I think the Spanish speaking like DeFi community is probably like, I mean, I know that this is a term, but if there's anyone from that space that hears that, they'll be super thankful. I know like at Across, we've been trying to reach out to more like Spanish speaking communities, and they feel like really maybe just very unheard in like DeFi overall. So I think that's like, yeah, a good marketing angle for you guys. But yeah,
Yeah,
I guess
thanks.
we're really ready, or kind of, yeah, super over time already, or a little late to get started. So I'll just start with the first question. General question is, I mean, you told us a bit about the background of the name and a tiny bit about Contango, but what's more of a deep dive about what your platform does, and why should we be excited to ape in?
Yeah, you break up a little there, but no worries. I guess I'll give a small introduction about ourselves and why we need to ape into Contango. It's pretty simple. We're bringing the first expirables to DeFi, especially to Arbitrum. And expirables are this kind of brand new, but at the same time old concept of derivative. They're very similar to dated futures. We just didn't choose to call them that way. And I can dig a little bit more into this. But as the names say, they're quite the opposite to perps. I think everyone is quite familiarized with GMX and other perp-like protocols where you can trade perpetuals. Expirables, on the other hand, on Contango have an expiry date. And yes, they're instruments that you can use to buy, sell, to long, short any asset at a specific time and at a specific price. And then if you want, we can go into some more details later. But that's the TLDR, I guess.
And from what I saw when I was looking through the Contango Twitter, your team and your protocol is the only one that's focusing on expirables, particularly on Arbitrum. Is that correct?
Yeah, that's correct. Indeed, as I was saying, the perps, the perpetuals became so popularized. They were invented by BitMEX, a CeFi platform, back in, I don't know, many years ago. And then they got super famous because they're very easy to understand. They got super widespread both in CeFi and also in DeFi. A lot of protocols started out, for example, per protocol. And then on Arbitrum, well, GMX took the lead, right? Yeah, as I was saying, expirables are quite of a different thing. Building them is not super easy because you are normally facing two things, two options. You can either build it with an AMM style kind of thing in DeFi, but that's kind of complicated. It really puts a lot of risk on the protocol building this instrument, or you can use an order book model, right? But order book, even if it's DeFi, it's not really on chain. So the whole team behind Contango, we're pretty big believers in DeFi. We want to be 100% on chain, use DeFi composability as much as possible. So we invented a third way, a third option to build expirable futures, expirable contracts in DeFi. And we're synthesizing them through spot and fixed rate markets. And then if you want, I can go again a little bit more into details on how it works under the hood. But yeah, that's the TLDR again. We're the first one bringing expirables to DeFi and again on Arbitrum.
Wow. And I feel also without speaking of, you said that you're a big enthusiast of DeFi, and for people who are familiar with different DeFi protocols, things like order books, liquidity pools, these are all very common. So the fact that your protocol creates liquidity for expirables without either of those things is super interesting. So yeah, if you could go a bit under the hood with that, I think that's pretty important because those are again terms that most people are familiar with. So it is interesting to see something such as your protocol without those.
Yeah, sure. Let's go into the details. This is a complicated bit, I guess, but I'll try to make it as simple as possible. So yeah, no order books, no liquidity pools. So how do we build this? The way I like to explain this is going back to the university books. As I like to say, my team doesn't really like this, but I like to say we built a derivative market out of thin air. Because indeed, we went back to what we're taught at university. If you take any economics, financial textbook, there is a little formula called the interest rate parity model. And it's basically a theory that says, this is pretty simple, the interest rate differential between two countries, between two currencies, is equal to the differential between the future price and the spot price. So long story short, there are four variables in this equation: spot price, future price, and the two interest rates. So we looked at that and we're like, oh, that's pretty cool because we can, simulate this in DeFi. So that's what Contango actually does under the hood. So we solve this equation for the future price, basically. And as I just mentioned, there are other three variables. So the future price depends on the spot price, which you can usually find on Uniswap. Everybody knows Uniswap. And then you need the interest rates on whatever assets you're trading, like ETH, for example, and USDC. And where do you have these interest rates with a maturity? Well, you have them on fixed rate protocols. And these are not super well-known markets in DeFi, but they do exist, and they're important. They're a pillar of traditional finance, and they will become, this is our thesis as well, they will become a pillar in DeFi as well. What is a big name in the fixed rate market? Well, this is Yield Protocol. So big shout out there to Yield Protocol. We're good friends with the team there. And what they're doing is they're offering borrowing and lending at a fixed rate. So we saw that and we were like, oh, this is interesting. This is the missing piece of the puzzle we need. We already have a spot price on Uniswap. So let's build the formula that we saw in the textbook. Let's build it in DeFi. So this is really what Contango does under the hood. It's basically a quoter that quotes you an expirable price for whatever asset we're offering at the moment, for example, ETH. And the way it works under the hood is for example, if you're going long ETH USDC, if you want to long ETH, well, under the hood, Contango will borrow some USDC at a fixed rate, swap them for ETH, and lend that ETH back at a fixed rate. And by doing so, by replicating these steps of the formula, well, we're able to quote you an expirable price. It might sound a little complicated, but it is really not. You can really do the same at any bank. You can go there, borrow some dollars, swap them for euros, lend that euros, and you're basically you're creating a future, right? And that's what Contango does in DeFi, all automated and all thanks to DeFi composability.
I think that was a really concise and very easy to understand on something that is quite complicated. I know, yeah, as you're saying, like kind of anyone can do that. You walk into a bank, but at the same time, there's still a lot of thought that has to go into that. So thank you so much for, just making that so comprehensive in terms of the overview of, how you guys are built without those two sort of major pillars of DeFi. I also was curious, like, why do you think no other protocols have built this? Because correct me if I'm wrong, but I thought you said that not only is Contango the only protocol pursuing expirables on Arbitrum, did you also say like kind of across Web3 as well?
Yeah, indeed, we're the first one offering expirable contracts. There have been, I think there's an attempt on Solana, Zeta Markets also offering dated futures. But liquidity is always the big issue, right? So if you use an order book model, then you need market makers. You need to, again, have deep order books so that traders can really trade. And the team behind Contango has been building trading technology in TradFi, crypto over the past 5-10 years. So we really understand, what traders want. And they want basically two things. They're the same thing: price and liquidity. So going through the hassle of building an order book with crazy deep liquidity is a major undertaking. And also building it with an AMM model is super tricky because, again, as I said, it puts a huge amount of risk on the protocol itself. So why are we the first? That's a good move. That's a good question. I think we did the right move because we were at the right time, at the right place. Fixed rate markets were being built and we were at the right moment, and we decided to seize the opportunity and decide, oh yeah, let's build this traditional finance formula in DeFi and take advantage of this market. So basically synthesizing expirable contracts and thus having liquidity from day one. I didn't say that earlier, but this is the big advantage of the model behind Contango. We're liquid from day one. And indeed, we were doing that since the beta we launched in December. You can try the beta right now if you want. And you can see that we're already liquid on both Arbitrum and also mainnet.
Wow, yeah, so then that was actually going to be my next question. I feel like you already sort of answered it, and I do know the answer, but out of curiosity, for something that was up until Contango launched not available all this time, and DeFi's been, around quite a long time, and no one has really solved that liquidity problem, and I guess the undertaking of creating such a massive infrastructure as you were describing. Is there, or have you seen like a massive demand and almost like a joy from the DeFi community as like, oh, finally someone's creating this? Or yeah, how has the response been so far since beta's launch?
Yeah, good question. Indeed, the response has been good. We're at a tricky moment, I think, because everyone is so accustomed and so familiarized with perps that we should be really good at, business development and marketing, explaining what expirables are, because even though they're just like dated futures from traditional finance, I mean, everyone has been trading dated futures on Binance or on traditional markets, oil futures, wheat futures, commodity futures. In crypto, this is not so familiar for people. So we need to make it like super clear. And that's also why we chose the name Expirable, to sort of picture them against perps, but there's no clash, there's no battle with perps. They're kind of different products. We can go into the use cases later if you want. But yeah, I think the response has been good, but we're bumping into a lot of people asking us about, oh, but what are expirables? And it's kind of hard to re-explain and say, hey, like, no worries, this is a classic product that exists in traditional finance. It was just a missing pillar for DeFi, but you don't have to like relearn something new. It's just contracts with maturity dates. It's a pretty standard thing. What happened was that, yeah, perps got really, really popular. The volumes are still in favor of perps. The liquidity there is crazy. But again, being able to take advantage of fixed rate markets was a big thing for us. And I think we can provide similar liquidity to perps from a synthetic point of view without using order books or liquidity pools. At least this is our mission.
Yeah, and that sort of hurdle, the learning curve hurdle for DeFi protocols is always, a massive undertaking in itself, right? So as you mentioned, this sort of re-education process that you have to go with, like, believe it or not, across to, we had sort of a breakthrough in terms of a really innovative DeFi mechanism, which is called reward locking. Funny, I think the Granary team, when we had them on for this campaign, they just recently had announced that they were building something similar for their protocol. But what it is as we reward the LPs, we give them ACX, which is our token. But then if you keep it unclaimed for, let's say, like a maximum of 100 days, during those 100 days, you keep earning your rewards as an LP, but your rewards are multiplied the longer you just don't touch the rewards. So that was to reduce mercenary farming, to reduce like the inflationary aspect of these tokens, like reward-based tokens. So I thought that was pretty innovative. But then we just did a poll the other day, and like over 30% of our Twitter followers have never heard of it. So when you talk about re-education, that's just funny to me. It just rings a bell of what happened last week.
Yeah, but it's also like super nice to rethink about, for example, what you learn in our case, what we learned at university, right? This interest rate parity model.
Mm-hmm.
And now we're finally able to use the university textbook, use what we learned for building something in DeFi. But at the same time, we need really to create good documentation, good marketing content, so that, being in such a frontier environment, we should be careful, when explaining complex derivative products. We should be able to, create good explanations, make things simple, but at the same time, explain all the risks so that, no one apes too much to stay on the theme, on the subject of the call.
Right, right. Yeah, and actually, that's really a fun marketing angle for you guys too, because the consensus is generally that, nothing we learn in school do we use in real life. But I mean, university maybe is not so much the generally thought of that way, but this is a perfect example of why that's not the case. Yeah, when you were talking about that formula, I was like, oh, that rings a bell. But yeah, never
Yeah.
really used it before, so
Yeah, well, thanks,
it's
blockchain,
amazing.
I'd say.
Yeah. And thank you to university for having that for us. So we'll go to the next question, which was, how does Contango automate derivative trading strategies? And just how does that whole part work?
Yeah, good question. Like, the short answer is we don't automate, meaning this is the next step. This is on the roadmap. It's what we're looking forward over the next few months. Because interesting piece of information, every time you open a position on Contango, your position is tokenized into an NFT. And I know what you're thinking, oh my God, like another NFT thing. But no, like, this is nothing to do with visual art or anything. It's simply an accounting mechanism. We're wrapping your position into an NFT because you enter at a specific price, at a specific point in time. Everything is so unique that the NFT standard, the ERC 721, is the best thing that you can use to tokenize something. But indeed, this opens up a lot of scenarios for building on top of Contango. So imagine like a sandwich. We're building on top of fixed rate markets and spot markets like Uniswap and Yield Protocol. So they're the base layer, and then there's Contango, the middle layer. But then you can even automate strategy. That was your question, by using, for example, our NFT. It can be traded on a secondary market. Can be used to build cash and carry vaults. There's a classic trade in finance called the cash and carry. We're not automating anything yet because the team is focused on the core functionalities. But yeah, we plan to do some hackathons in the future, maybe sponsor something and have other teams, other devs joining in and build on top of Contango. So if anyone is out there listening, if you have some idea on how to automate some strategies, there's already a lot of delta neutral vaults in DeFi on Arbitrum, a lot of delta neutral vaults with GMX, GLP. But you can do the same. You can build delta neutral vaults that, instead of collecting funding fees, as I was saying, can automate cash and carry strategies on top of Contango. So a lot of work to do. But yeah, we're on it.
No, and I'm happy to hear about the NFTs representing financial positions, and I guess looking forward to seeing more real world assets come into play, which I guess would have to do with your protocol as well, no?
This is a little bit tricky because since we're building on top of fixed rate markets, right now we can only offer the same assets and maturities as they are offering. So whatever yield protocol is offering for fixed rate borrowing and lending, let's say ETH, DAI, USDC, well, we can build pairs out of this. ETH DAI, ETH USDC, so on and so forth. So real world asset is not really right now a target for us. Of course, it's a super nice trend that we hear every time we go at conferences.
Yes.
Yeah, it's another major development, I think, another major undertaking.
Oh yeah, no, so for sure. That sounds like almost like reinventing the wheel or something, right? Like it's just such a huge undertaking. So yeah, whoever pulls that off, kudos to them. But I wanted to ask you, you just mentioned about the team, and I think yeah, you spoke a bit about uh, the protocol, of course, and some of the interworkings and the intricacies of the protocol itself. But yeah, I think part of this campaign too is getting to know the team, getting to know sort of who is part of your community thus far, who's been, kind of your cheerleaders until now. You told us that your traders are really interested in uh, the liquidity and price, but yeah, anything else about like what type of person uses or is interested in expirables?
Yeah, sure. So maybe a little bit about the team. I think the idea behind Contango, it's 1.5 year old. So yeah, we met about 1.5 year ago, but we all knew each other previously from, different gigs or simply being friends. So no external hire was made. We're a close group of friends building in DeFi. There are three co-founders, and they did an MVP. They did a prototype back at a hackathon. Now the name is slipping out. And they decided to build, expirable futures in DeFi. They created this MVP with liquidity pools in the protocol. But then they bumped into fixed rates, and they decided to use fixed rate markets instead. And then they enlarged the team, and we also joined. Contango was born, and right now we're in beta mode since December. So you were mentioning a little bit about the community. So right now, when we opened the beta, we saw a large influx of people willing to try out the beta. Indeed, it is still open. We're still accepting one-to-one calls with users. We're happy to reward them for providing feedback. This is a little invite, a little alpha that I'm dropping. If you're willing to contribute a little bit to Contango and give some feedback, you can use the beta. Just go on contango.xyz, use the beta, play with it, and come to our Discord, join the other people that are there in the community. There's a little bit of everything, classic degens, but even retail that are starting out, trying out a few derivative protocols, GMX, Gains Network, Dopex, and Contango. Everyone on Arbitrum, of course, great network to be on. And we're also having calls with traders, professional traders. We have a few investors from big names like GSR, Amber, Cumberland. We're having regular calls with them so that we make sure that we build a product that caters for both worlds, right? Professional traders and retail. So again, if you want to provide some feedback, feel free to join our Discord, and you can find some links there on how to do that.
Perfect. Yeah, thanks so much. Because I guess the mainnet has launched, but there's another launch incoming. So this is a really good timing to get in, guys.
You're right. Indeed, this is probably the second bit of alpha I can drop. We're wrapping up our audit, so we're exiting, the beta mode pretty soon. So there's going to be a main launch pretty soon. But yeah, you're still in time to come to our Discord, provide some feedback, and be an early tester. Yes.
Perfect. Yeah. And I mean, especially being part of something this innovative, DeFi first, we always kind of feel like they are far and few between, right? So it's really cool to be a part of something that is new and has been already doing, super well. And of course, part of this amazing community that is Arbitrum. We've been having so much fun on this campaign, and yeah, we thank you for dropping some alpha for us. But I think that's all the questions that I had for today. Did you have any other sort of like last words that you wanted to mention that we might have missed in the chat?
I think it's all good for us as well. As I said, go and try us out. Ape a little bit into Arbitrum, into derivatives as well. I think you had topics on the podcast as well. There are a lot of new projects on the derivative space. I think talking a little bit about use cases, something that I missed, but I would like to add is that expirables are really good for hedging, but also speculation. And the third little bit of alpha I can drop is that since we have no funding fees, because that's how data futures are normally built, there's just a basis rate, there's just a spread with the spot price. This spread can be either a premium or a discount. And right now, if ETH seems to be at a discount on the June contract. So yeah, if you're going to long some ETH and pay no funding fees, because funding fees can really add up to your balance, you might end up paying 60% annualized funding fees on perpetual venues. Well, you can do that for free and indeed at a discount on Contango.
Yeah, I mean, if that isn't the sell that we needed, that is that's literally perfect. Yeah, of course, that's a major, major draw. Oh, I did want to ask you about that. So I'm really happy that you brought that up. That was something that just
Yes.
slipped my mind. Yeah, so yeah, thank you for mentioning that. And I think, yeah, other than that, that's the end of our chat. It was really nice to get to know you, Mitch. I know we talked quite a bit on Discord DM, so nice to
Yeah.
hear your voice. And yeah,
Likewise.
we'll keep in touch. And as always, for our listeners, thank you so much for joining today. And in a couple days, I promise in a couple days, because this our campaign is almost done. We're going to be having a game based on this Contango chat, so you'll have a chance to win some prizes and either ACX magic tokens we've been giving a lot away as well, or maybe a different token. Who knows? But yeah, thank you so much for joining. As usual, yeah, jump in the Discord. We'll have some more games later today. And have a great day, everyone. Have a great day, Mitch.
Yeah, likewise. Thanks so much for having us and see you around.
Yep. Thank you. Bye, everyone.